Good morning, it's April the 8th, it's Wednesday, and we're still in the middle of this coronavirus pandemic outbreak. This is another episode of the Regal Real Estate Update. For the mortgage update, things have turned slightly for the worst from last week. The FHA and the government loans have tightened up their guidelines, so that means for us is if you have a score lower than 660, 680, you may not be able to qualify for the loans. They have also tightened up on the loan to value, which is the equity of your home that's required for you to be able to do financing, and also the debt to income ratio, which means that one, you should still have a job or you still have an income if you're self-employed, and two is that you are still receiving this income even though we are on this crisis, in the middle of the crisis right now. I might want to add that the qualifications to be able to do refinancing can be affected if you have requested for forbearance, and I'm going to talk about that a little bit later. For our real estate news, we know that right now, even though we are a shelter-in-place state, the realtor associations of most of the Southern California are allowing virtual tours. So that means that although we cannot open doors for our clients, we can show properties to virtual pictures or virtual videos. That's the only way we can show properties. We can still accept offers, and we are still doing pre-qualifications for buyers that can be approved at this time. As for the rates, the rise in the unemployment as well as the uncertainties in the market has caused a great deal of strain for our lenders. That means that we as brokers and loan originators are finding it very challenging to lock in a good rate for you. There is a big gap in the costing of the prices. That means that you as a borrower would have to pay points or percentage in order for us to grab a good rate at the moment. Some of them ranging from 0.5% up all the way up to 3%. Even the VA loans are now higher than what it was compared to the February rates. Well, this may not be a good time to lock. It's a good time for you to get in touch with a knowledgeable mortgage broker that could talk to you regarding your specific situation. There are things that we could put into place that will get you ready. So once the rate drops, and again, that could be only a very short period of time, you will be ready for the refinance. Another thing that I would like to add is that if you have applied for forbearance, that may not qualify you to get a refinancing later on. Another reminder, if you are shopping for a refinance loan, for instance, please be careful for the bait and switch strategy or propaganda that is going on right now, especially with a very well-known lender. What happens is they will quote you a very low rate at the beginning of the phone call. They get you to go ahead and say, okay, let's do the loan, get you through all the process. And at the end of the day, they will let you know that rates have changed. Something has changed on your situation, and therefore you are no longer qualified for that rate that you had talked about in the very beginning. This is very prevalent, and I have gotten a lot of clients or borrowers that have been switched from that lender over to my company only because they have changed the entire rates on them at the end of the day after 30 days or 45 days of processing. So just be careful. I know that it's very tempting to accept a rate over the phone for somebody you don't know. And well, fact of the matter is they don't know you personally. That's one of the things that having a mortgage broker who will work with you personally is up to your advantage, because the mortgage broker would always want to put your interests first. I also get frequently asked about the no-cost loans. So just to keep everything factual, there is no such thing as a zero-cost loan. What happens is the lender would pay some of those fees in your behalf. There is no way that you can go through a refinance if you don't, one, pay the escrow fee, two, title fees, the county fees, and all the other fees associated with changing title, changing lenders, changing the rates. and the changing of the contract. So what it entails is that yes, there may be no fees, but they would maybe just put more amount to your loan, add on to your loan, so that essentially that is a zero out of pocket. Or two is they can absorb some of the costs, such as the appraisal, lender fees, and as well as let's say the insurances, the transfer taxes. But zero cost is definitely not existent. So what they can only take care for you legally would be, say, appraisal, credit report, escrow, and title, and they have to disclose that to you in the beginning. At the end of the day, you as a borrower will still have to pay the payoff fees from your current lender to the new one, to property taxes if you owe it, 3, your insurances, for your prepaid, say your first month of payment. So essentially, it is not free too. Sometimes it's a misconception that you skip a payment, but in reality, you're just prepaying that first month. And as well as inspection fees if needed. So that's what happens on a zero cost or zero fee type of a refinance. I hope that answers your question. Let's talk about forbearance again, because I cannot stress how important this is, especially to you. So when you call your lender asking for a forbearance, usually it is a 3-month forbearance period. And yes, it will not affect you in your credit report as a 30-day late, 30, 60, and 90-day late. But what happens after, say, a 3-month forbearance period? Now, that will not be a part of the contract. So therefore, they can essentially put 120 days late on your credit. And 2 is, how are you going to be paying off 4 months of monthly payment at this point? So, example, if my mortgage was $2,000, month 1, which is April, month 2, May, month 3, June, I won't be making any payments. But come July, am I able to make $6,000 plus the $2,000 that I will be owing to keep my account current? So that would be a question that you need to ask yourself. Are you going to be able to be in that position where that is possible for you to do? So what is a possibility? One is you're going to call them again and say, hey, I need another 3 months of forbearance, which is possible. They can give it back to you. So then what happens to you? You are now 6 months behind. What happens to the missed payments? It is not forgiven. That amount is put on top of your principal. So then you'll be paying a lot more interest rate. And then 2 is, how are you going to repay it? So now you're going to want to talk to your lender about a repayment plan. They can give you a repayment plan, or they can probably say, well, let's do a modification. Modification would mean that you probably have to agree with the type of contract that they have for you, because at this point, you won't have a lot of choice. Because of the forbearance on your record, other lenders who may be able to give you a much lower rate may not want to take you as their new borrower, because, well, you have had a forbearance on your record. That means that if you had forbearance for that lender, chances are you'll ask for forbearance with them either now or in the future. They don't want that. You're going to be a high risk borrower. So if you are thinking of maybe purchasing in the future, you may want to think about that. Well, again, if you do really need it, that is what it's there for. But if there was a way for you to keep paying your mortgage payment, please do so. Another thing that I would like to plead to you is, when you make these payments, this actually strengthens our economy a little bit better, because it just makes the mortgage industry a little bit stronger. Once the mortgage industry fails, a lot of things roll along with that downhill. Remember what happened in 2008? But we don't want to do that. Right now, they are still in position to stay strong, and it requires your help as well too, because the HFA right now is not giving the lenders the bailout that they need as of the moment. It's still on the negotiating table. So this is the reason why the rates are still not as low as we want it to be, because the lenders are hedging or trying to just merely protect themselves. So understanding that concept would get you to realize why we are in the situation where we're in right now. But I am more concerned about your ability to, one, refinance in the future, and two, if you want to purchase more properties at a later part of the coronavirus, or even after this. So your options are still, one, refinance now while you still have the equity in your home. Because again, if you're 6 months behind because of a forbearance and you're unable to pay that, well, the lenders can actually force you to, one, short sale on the property, foreclose it, or sell it, right? So you don't want to be in that position wherein you lose a lot of leverage. So you may want to do it now. If you refinance now, it may not be the best rate possible, but if you can lower your rate just a tad better, then maybe you can afford to do so and keep your ability to be able to refinance. Okay, that was a lot, but you know I care. So let's talk about other things that matter for right now. One is stimulus check. When are you going to receive that stimulus check? Well, the first batch is going to be coming out after April 15. If you have filed your 2018 and 2019 tax return and you have filed for an electronic deposit, then you should be seeing that pretty soon. If you haven't filed 2019, it could be later on during the quarter, or I would suggest that you can file your 2019 so you can get that as soon as possible. I have posted a link to kind of calculate how much stimulus check you're going to be receiving. I'll repost that again for you. Now for your health coverage. Cover California had issued a message that they have extended the enrollment period to up to April 30th. So up to the end of the month, you can go ahead and enroll through Cover California or through a broker such as myself. Just a reminder that this year you are required to have your health coverage plan. So here's an important information. If you don't have a plan for this year, estimated 2020 penalty for not having insurance for individuals is a minimum of $695. For a married couple, you can be facing a minimum of $1,390 of penalty, and for a family of four, you have a minimum of $2,085 of penalty if you do not have a coverage for 2020. Another deadline that has been extended is your application date for Real ID. Like this, I already have mine done. So you have this little bear with star at the upper right hand corner. So for the requirement for the Real ID licenses, they have extended that until October 1st, 2021. Originally, it was October of this year. So go ahead and have that done and make an appointment with DNV once the shelter in place has been lifted. For our scam and fraud alert, please be careful. You will be receiving a lot of phone calls, email, or messages regarding your stimulus check or anything else that may be important to you. The message that I received is that the Treasury Department says if you receive any emails, calls, or other communications claiming that they are from the Treasury Department and they are offering COVID-19 related grants, stimulus payments, or any type of loans in exchange for personal information, your personal information, or an advance fee, or any charge of any kind, including, say, a gift card, money order, transfer or wire money through MoneyGram, please do not respond, because they will never do that. No one will be calling, emailing you, or messaging you, even through social media, regarding processing of the stimulus check. Just a reminder. And what if the IRS does not have your direct deposit information? What can you do? So in the coming weeks, the Treasury Department plans to develop a web-based portal for individuals to provide their banking information to the IRS online so that you can receive payments immediately as opposed to getting checks in the mail. So they'll try to do that. For more IRS-related questions, please call 1-800-829-1040, 1-800-829-1040. Please be aware that you may have a very long hold time. So another good news is that starting today, April 8th, the MLK Junior Community Hospital has launched a free COVID-19 testing site, and the address is 1731 East 120th Street in Los Angeles, California. So go and see them if you feel that you need to be tested, if you're symptomatic, and if you feel that that's necessary, go ahead and go see the MLK Junior Community Hospital at 1731 East 120th Street in Los Angeles, California. That is it for today's real estate, mortgage, and community update. Thank you so much for continued support, and I will see you again for our next episode.